Let me also bring on board Dhananjay Sinha, Head of Institutional Research with Emkay Global Financial Services. Dhananjay, good morning. Thank you for joining us. Dhananjay, what really spoke the markets yesterday? RBI disappointment, or it was absolute flat selling by institutional investors?
No, I think there is a combination of factors. I would say that, with respect to the RBI statement, I think what is coming out very clearly is that RBI is definitely not embarking upon a rate easing cycle, so to say. So it's not trying to be accommodative as of now. So I think from that standpoint, if the market was expecting that there is a deep rate cut cycle going ahead, I think there is a certain amount of caution that is warranted at this point of time. So ahead of the statement, I think the market had run up quite a bit, and it was taken for granted that there would be rate easing cycle. So I think there is a certain amount of rebalancing that is happening over there. And apart from that, the market had run up quite a bit over the last few months, 1 or 2 months, largely on the back of the fact that the risk-on trade had actually been playing out very strongly, not just in India but also globally. So risk aversion had actually compressed. If you look at credit spreads across emerging markets and also for Indian Euro bonds, those have actually compressed. So clearly there was a very strong wave of compression of risk aversion, and that reflected in the rally in equities in India and across the world. So I think that is on the back of the fact that later in the year, last year, there were many announcements from the Fed, ECB, etc. So all those things had been fairly supportive and infused a significant amount of global liquidity. My sense is that you have a situation now that RBI is signaling that it will respond only to a certain supply side improvement, if at all it happens, and as it brings down inflation, it will respond. So it is not going to put in front of the rate cuts to actually boost the demand side and the economy. So that's one part of it. And the second part that I'm basically looking at is that the risk on may be plateauing in the coming weeks. So it will be prudent to actually prune down some of the cyclical portfolio, part of the portfolio, components of the portfolio going ahead, and would want to take the money off the table selectively across cyclicals and rate sensitive.
Dhananjay, leave us with your top mid-cap ideas as a house. What is it that you're recommending right now to your clients?
We have been positive on the pharma stock for a long time. We continue to hold on to that thing. So basically, we have been positive on Cadila, Wockhardt, for instance, and the auto space. We have been fairly positive on Tata Motors. We have put in Hero Motors here, and Exide in the mid-cap space. Within the banking space, we are looking at, in the large cap, we have been positive on ICICI Bank, but in the mid-cap, we are looking at Federal Bank and LIC Housing. And in the IT space, another place where we have been somewhat overweight. So over here, we have HCL and Tech Mahindra. These are the stocks that we have been somewhat positive on. So we continue to hold on to that view.
Dhananjay, even though you're bearish, you've given me at least 7 or 8 stocks to buy, which obviously means that you are telling your clients to buy this market.
The market view is on one side. We have been looking at very stock-specific ideas, which is basically aligned to our macro and bottom-up view. So we are definitely not saying people to actually be away from the market. So we have been fairly consistent on that. And our portfolio has actually done well over the last 2 months. So, the overall market sentiment that I'm talking about is something that is from a broader standpoint. So, stock-specific view is somewhat different. So, I'm not basically recommending people to be on cash.
Then just take your neck out, 10 seconds. Do you think Indian markets will touch a new high before budget?
Very difficult call. See, I don't make that call at all. See, I'm looking at what are the factors that are driving the market and how they will pan out. So the numbers can actually touch a certain new high on a particular day. So, I am not basically targeting anything like that. Basically, the thesis that I am basically looking at is that the factors that I have seen pushing up the markets have been largely liquidity driven and global driven. As far as fundamentals concerned, I don't see that improving as much as the market has been pricing in. So, and I have kind of measured the duration of the liquidity that for it to last. So my sense is that it might be picking out pretty soon.